Okay, hi there, guys. Just let me know if you can hear me. G'day, Gino. G'day, Peter. Make sure my internet's coming through okay. Good work, Gino. Yeah, pretty sure I'm coming through loud and clear. Fantastic. Thanks, Pete. All right, guys, thanks very much for joining me. Anyone that's new, welcome along. Or if you're watching it later on, welcome along to Trade Setup and live stream. We've got the 4th of March. So ticking along nicely. The market's up nicely today after a good run up on Friday. Continued strength in the US. We'll have a bit of a chat about that in a minute. We probably won't go over too much. I know we normally talk about the overseas markets, but they haven't really changed that much. The factors are still the same. There's a lot of data coming out if you're watching. A lot of data coming out this week. We've got RBA, I think it's tomorrow, ECB interest rate announcement Thursday, and non-farm payroll is the biggie on Friday in the US. So there's quite a bit of, it could bring a bit of volatility. You don't know what's going to happen, but just be wary of what data or market moving events are coming out. You can always get that on online. Just search up, was it economic data release, and you'll find a website that can publish that. Now, so anyone that's new, top left-hand corner of your screen, you can see us at Twitter. That's at trade_setup. Facebook, the top right. Most importantly, the bottom right-hand corner, subscribe to us at YouTube. It'll be at TradeSetup, capital AU. You'll see down there. And we just got our general advice warning we've got to mention each time. Let's get the ball rolling then. Hope we're all doing well today. I'll get up my other screen now. I'll get rid of this. So just let me know. You should be able to see the whole of that screen now, loud and clear. So today, I'll get up just the US. We'll just have a quick look at where the overall markets are. So this is the ASX. No, it's love. XJO just keeps ticking away, and it's just pushing through 6,200 today pretty convincingly. We're up 36 points at the moment. I thought we may have found a bit of selling there, but like I was saying the other day, even though we got a good red candle here, we did back off. We did react lower off 62 or just below. The anchor's not broken, so it's really important to know where your anchors are, where the trade's going to fall apart, or where the market could potentially find more selling pressure once those anchors are broken. But until they do, the market can keep ticking higher, and you don't want to get caught bailing out of everything because you simply think that this is a good reason why, good area to sell. Always hold on, let yourself be proven wrong, especially from the technical point of view. So that market is still ticking along nicely. I mean, if we hold above this 62 and we look like you can see this trend up from end of last year, pretty much when everyone was away on holidays, just ticked off there. Hasn't looked back. You've got higher low, higher low, higher low, higher low, just recently at 61. And this could easily extend back up to the new highs and keep ticking along nicely. If you go to the weekly, we're coming up in the previous highs from mid to end. Well, what was that? September last year, August last year. Those highs, there's nothing really in the way at the moment. If we hold above this 62, even these highs at, what's that high at 62.34, we're above, just a touch below there now. So, no, not just 62.34 we did, and we rejected that. We could easily reject from here, but the way the market is and the way we're all sitting around waiting for US-China deal, I wouldn't suggest this is going to back off just here and just hover around here. There's no reason for it to. The market's still quite bullish. There's quite a few shares popping up now. They're starting to get some good, not the biggies, but I think more sort of mid to lower cap. They're starting to go. We've got a couple going hard today. It was SPT and APT, those two in that same sector, along with Z1P. If you look at those, they're kicking along nicely. There's just some. It could be a bit of a blow off, but we could these shares could back off or take a bit of heat out of those, and then the banks start running this. Something's going to just run this index up. So until this thing turns around and you get a definite kind of break of an anchor. So at the moment for me, it's really that 61 zone. If we get pushed back down through 61 and then we chop around, maybe build a lower high like we did up here, then there's no reason just to get bearish just yet. I mean, the problem is if you've been bearish for too long or you've been out waiting for a pullback, you could be out for a long time, and that's the last thing you want. Even though it's hard, I mean, um, sometimes the best times to be in are the hardest times to be into the market. When things are looking stretched, that can just keep going and keep giving you some really good returns. So it's just something to bear in mind. Let's just go to the S&P. Let's go to the index. I'll change that chart. Oh, still got a MACD on there. All right. So this is your the weekly on this page. I mean, it's the same. Blasted through a key level around that 20, just above 25, 25.50. Blasted through with this pullback, sorry, pushback, push lower, pullback, and then just straight back up over Chrissy. I'd say the Dow is pretty much exactly the same. Always got to find the Dow. Dow is the same sort of price action. We had that sort of nice curving action, got into new highs, but the fact that you've got this push through the highs and that green weekly candle, and the next two are just struggling, that's not a good sign of strength. And from there, obviously, we know what happened. It sold off, took out the anchor to that trend up. So from here, it's more, we could be going right up to these highs at previous highs of 26,600, say, and then getting a bit of steam come out of that recent rally from the start of the year. I mean, by all means, we are looking stretched, but also there's no reason to worry just yet. I mean, this market could just keep ticking higher because it's always news driven. It's news driven on the back of what's happening with the US and China. Now, I think we spoke about this last week too. It could be buy the rumor, sell the fact, but the only thing that's sort of what's getting more and more of the known is that a deal's going to be done and potentially mid this month. Um, Now, what's the unknown is more of how that's going to affect in the way of growth, because we're pretty much people are banking on, okay, there's going to be, once they get their deal going, maybe China's going to end up better. So China's going to get some better economic data coming through, better figures coming through, because they are contracting at the moment, and the US data hasn't been crash hot. I think recently they just had GDP maybe, or something come out better than expected. So that's good, but we don't know how much better it's going to be. Is it going to be enough to kick along this bull market, or is it, like I said, buy the rumor, sell the fact? Once it starts coming out, they got a deal, and then they're still relying on companies to keep growing, corporate earnings to keep performing. They're well over, well and truly overgeared at the moment or extended. So there's a few things to refocus on. There may be a bit of profit taking once it comes through. Again, we have to wait and see to let it show us what it's going to do rather than just guess. Otherwise, you guess too much, you get out and it just keeps going, and then you're just chasing your tail for another pullback, just waiting. FTSE, yeah, this is a weekly on the FTSE. I'm not, it has pressed up, but this looks like, potentially it could be a prime position to roll over. You don't know. It's right on the 200 EMA. Doesn't mean anything just yet. It's still up. You got the market's pressed up, pulled back, got a higher low, pressed up, potentially in a zone to build a nice higher low, and it's probably about, of this leg up, about 1/3 of pullback of that leg up. So it's still quite strong. Look where your stochastics are. Sort of in that oversold territory, and we're holding up near those highs around 770.50 on the FTSE. So there's no reason why this can't start picking up and take out those highs and have another good leg up. May need a bit of work to do, may blow out, and you can see this little inside high low here at about 71.50. No, what we got? 70.64. So it could easily wash out that like we did here and then bounce straight back up for a new leg up. We don't know, but it is looking like it's in a prime zone to continue on up. And the DAX, grinding high from the lows at the end of last year. And their weekly, there's a lot more heat coming out of that market on that on the DAX anyway. But the weekly's not looking too crash hot where we are. It's sort of the reverse of what we just said. And it's getting a bit extended up here as well. So the DAX is a little bit different story. And they've got their Brexit issues to work out. So we'll see how that plays out. So that's about it. Hang Seng, just been a constant solid grind up. Nikkei, same, into December, constant solid grind up, getting a bit extended up here. So there's a few markets that are looking extended, but again, there's no need to think it's extended, let's sell. It's extended, be careful, tighten the risk up, wait till it, you're going to have to take a few stops probably on the head, That's the way it is. You don't want to cut it off because the market's looking extended. It can stay extended for the next 3 months, 4 months if it wants to, and just keep grinding higher. And you'll get people that get stopped out, chase their tail, that fear of missing out, chase it back up again, and they just keeps ticking off higher, until we get something that's going to change that direction of the overall market. And then from there, it's a matter of waiting and see what happens. So that's it. Let's go over some shares just at the moment. So actually, no, just get into the topic. What I want to talk about today, before we kick on, is there any questions just what we're saying? Anyone got a different opinion on the overall markets, bullish, bearish, whatever it is? Um, if not, nice head and shoulders on the XJO. Potentially XJO. So this is the longer term trend up. I mean, this is your monthly, don't forget. GFC, it's just been grinding higher low, higher low. If this is another higher low, actually, let's draw that. I think it'd be interesting just to quickly see what's going on. I have to call that person back in a minute. All right, so we've got this market here. Don't worry about that. And what I'm just looking at, this is your longer term trend, and it could be that, okay, bang, look at that. It's just a little bit thinner. Whoops. So this is, don't to get too bearish. We've touched down here, we've touched down here, we've touched down here. This was a bit more controlled. You can see it popped up green, trended down, popped up, big washout before we started building again. I think that was around the time of Trump, the US elections. So probably why it was getting a bit more control after getting a bit stretched up at these, that 6,000 zone. This one here has been straight down if you're looking at the monthly anyway, straight down, but it touched on that support zone as well, and we bounced straight back off. So I think that's caught a lot of people off guard. It could be just that it's resuming that trend. If you take it across the top, we could be looking at to the highs over the period of the next few months. So really looking at it from that perspective, no reason why we just can't keep going and keep grinding higher. You do think that the market's going to have to take a breather at some stage. So ticking it down to your weekly charts, it's overextended. Maybe we chop around here, test 6,000, pop back up and take out the highs, or we trade up straight up to the highs here at 63 or above. But go through it, pull back, consolidate, go again. So there's all these sorts of things, but the overall monthly trend's looking good. The weekly trend is, we've had a good correction here. It's just this last pop up has keeping a lot of people out of the market, I guess, and caught them off guard, which can happen. So yeah, there's no reason why this market can't keep going. So hopefully everyone's head and shoulders. Not exactly sure. Oh, down here, I'm guessing. Anyway, let's get into the topic of the talk of what I wanted to chat about today. Is more just using volume. I know it's probably something's pretty obvious, and everyone knows if you've done some sort of technicals, looking at the volume. But I think having volume is one thing, but having it in conjunction to what you're seeing on the price action is another thing, which some people, may or may not have a bit of a grasp on. Let me just get. This is the one I was just looking at the other day. I was looking at. So long story short, we did. God, I'm seeing this activate windows right where my volume is. So we did have an alert. It was about 52.5 when we alerted this to keep an eye on it, and then sure enough, we missed that through 55. That would be a prime entry. But the thing is, just go back to the weekly. Sorry. All right. So the weekly is in a good spot too. So yeah, it's important to take note of what's happening with the price action, with even individual candles. I mean, you can see one just here had a good spike up in volume, but it was rejected. So you've got to put that into what's happening with the volume. Obviously, the volume is increased interest. It's increased on the upside or downside. That's what we've got to try to extrapolate from our charts or try to work out what's happening overall. And where we are on key levels. Have we broken through a key level? Are we approaching a key level? What is happening? Like through here, you can see that the market a few times, some good volume here, but that was on a down date. It got rejected of highs, so that's not a positive move from the buyers just yet. It's probably not supportive for buying. It's just matching off between buyers and sellers. Probably more the sellers hitting the bid rather than the buyers hitting the offer. By hitting the offer, they're paying up. Okay, so when we see an increase in volume and then we've got that sort of expansion up and we finish on the highs, big sign to take note of what's going on. But if you're looking at a little spike in volume, say here wasn't too bad. I mean, we've got this market popping up, some good volume, finishing on its highs, um, and good volume the day before, just after we're coming through a level. So you could have, that could have been a bit of a heads up, like, oh, we're just starting to come out. But I think the longer term structure really wasn't in play. And if we go back to the weekly, you can see what we'd be looking at on Dub is you've got this market pressed up, good pullback right down to, I know that's 2017, big pop up. Started last year, we pulled back through that 30 cent mark, and then we popped up, say, mid-year. When the rest of the market was starting to sell off or we're getting a bit weaker, we got the market in about August, say here, DUB was actually going sideways. So it's a good sign when the rest of the market's getting hammered and starting to sell off and there's a bit of fear, where are we going, we're driving lower into Christmas on the ASX and your bigger shares. This was just going sideways. So it's actually a good sign of strength when you compare that to the overall market. So you've got some price action here. You can see, go back to the daily, this level through around 50 was starting to be a key level. And we can see that it's starting to press up into that key level at 50. All right, but if you just, flicking back to the weekly, after that we had that 60 zone was probably your next one. But what we're always looking for, say off this weekly chart, it's hold a low here, a higher low. We're looking for this zone at around 35 to 40 to be a high low. I mean, if I draw this up, you'll see it quite clearly. But we've got our levels coming into play. We know what we're looking at. We're sort of just trying to get an idea of when this strength is going to kick off. I like the fact that it's holding through 35 to 40, but the problem is it keeps butting its head up against that 50 zone. And then on top of that, you've probably got this kind of price action. So around here, we didn't quite know. Actually, let's just, I'm not going to get the volume. Actually, I'm not going to get the volume. Just 1 second. I'll get this up on here, Trading View. Because Trading View is good. You can actually keep it on there. So we're out to my weekly. I don't know if I'm going to get volume. All right. I don't think I can get volume out of this. I actually don't pay for it. It's just a free version I use for charting. So let's just, all right, we'll just go back to where we were. So what we're looking at when we're assessing this market, if you had it on a long-term chart or a long-term watch list and you're watching this, is up till about probably even at this stage, just coming into the end of the year, you've got that green candle there before the market sort of tipped over and we got sold back down to 40 again. It was probably the first real heads up on that week, which would have been in December. So that's in December. That first little pop up here was the first heads up where we're starting to press up and it was looking like the bulls were starting to win or the buyers were starting to win. I say, okay, so before that, we really have to take into account if we're looking at volume and we're trying to assess what's happening in the overall market, we want to buy it. We don't really know what's happening just yet. We don't know if this is going to roll over and take out the low. We can see that's quite clear consolidation through between 35 and 40, so 38 lows and 50-cent highs. We can see that's just consolidating. So we're really not 100% sure which way it's going to go just yet. If you're going purely from that weekly, I mean, you can easily buy it off the support and then it pops up, builds a lower high and washes you straight back out again. And that's the risk you take buying it within this contraction, that longer term contraction zone. By contraction, I'm talking about lower highs coming in and you got high lows. So that longer term, the buyers and sellers are coming to that point of agreement. So we've got that on our mind by looking at the longer term weekly charts. If we drop it down to the daily, and if we were looking at the volume, if you're buying it purely, you got a spike in volume, you're looking at the daily, you got a spike in volume, you might have gone, okay, good, bit of an increase in volume on the 23rd, go on the 24th, we're starting to get more volume pour in. Okay, the next day I buy it. Okay, it's a red candle, doesn't matter. The day after that, it's picking up. Okay, we've just broken through a couple of days highs on this green candle. That's great after a spike in volume, so we know there's buyers interested, but the problem is we're still below 50 cents. And at that stage, we hadn't really broken out of that contraction point on the weekly, and we were somewhere around here probably. I think it was somewhere around this mark. So we're still in contraction. So that's the risk you're running if you're not taking into account maybe a spike up in volume along with um, the overall structure. What's happening in the overall structure? Are we starting to break out? We're not breaking out. And here you may have, I mean, in all honesty, it has played out okay. If you didn't get stopped out, you may have taken yourself out with that 45 zone because it didn't break out. It didn't go on like you expected, so you got chopped out. You might have done it a few times. You know, back in here again, spike up in volume. I looked to buy on that next green day. It ticked up intraday. Buy that after that little spike up in that daily volume, and then get stopped out again. Is this making sense, guys? So what I'm saying is that volume is a great indicator, but it really is, for me, it's another supporting of the overall price action of what's happening. Um, and that's all everything is always doing. That's why you're looking for that kick up in volume, supporting your overall price action. So really, for me, what I was doing with this weekly, by the time we got to this daily chart, it's already broken out. So back to the weekly, sorry. At this stage, it really started taking my, I had my eye on that. I think it's just through 52.5, and that you can see the market is quite clearly the buyers are starting to win. The support at 40 is going to hold the buying strength, and you can see the selling strength really started to peter out. People are just stepping aside, especially after this first candle that looked break up. It did get rejected back down, and we went back down to test 40, but that was the first heads up where, okay, the buyers are starting to win, and there's that lift again, and we lifted straight back up to 50 on that weekly basis. So that is about here. We've really got to start taking note. Okay, we're not, for me, I would have been biased up on this one. We are still in consolidation sideways. The sellers are really taking a breather. So you've got all these things playing out, and I would be looking for purely and simply a higher low to hold. And it did when we come in a bit late to this, but you can see that higher low when it started sitting on top of the MAs, that's a bit different when you get, good pop up in volume there, obviously. But then we pulled back, and we pulled back on light volume too. So it's always important to see we've got a big kick up in volume on this day, which was the 30th of Jan. 30th of Jan, I'm on a daily chart, yep. And then after that, it really petered out. So that volume there was 1.2 million shares. The next few days, we were trading around 24, 25,000 shares. Maybe this day was around 150,000 shares. So really did ease off. But the thing is, it was just sitting there and starting to consolidate those highs. And then what you got after that, so this price action, if you bought it through, what's that, 50? You got the green candle here, even if you just bought it on this day, which you can see we really got that volume kick off that day on the 12th of February as well. And that's that breaking through 50. And you can see it's opened up. We actually opened at 50 and we hit a high of 53.5. You can, again, after that day, even if you're looking at it after that day, you've got all your structure starting to play out. You've got a break up out of contraction on the weekly and through that 50 zone, basically on the 12th of Feb. And we've got that increase in volume. So what that's saying is that people have pushed it up through 50. It's been quite a clear level on the daily and on the weekly to watch out. We know that buyers are starting to take control because sellers are just starting to step back. All right, we got that from the weekly. The market's breaking up out of contraction. Whether you got that point of agreements, the point of agreements playing out, we saw the buyers start to take control on the weekly, but it just needed to get through 50, and it's done that. So everything's starting to tick off, and then you're getting this increase in volume where it's bringing in buyers are starting to be happy with where the price is. They're starting to pay up at higher prices, and you can see this one red candle after we held this broke up through 50, come back down and retested the 50 zone, all on this increased volume as well. You could have just bought it straight up through the highs at 52.5, I think it was. We looked at it at this day on the 12th, but really did not alert it through highs of 50, 55. So for me, that would have been a prime entry. Even if you didn't get it through that 50 mark, you could have had it through that 52. You've got everything supporting it. Okay, the market's a bit stretched, but don't forget, volume's sort of the more important thing. Even though this market's stretched, it can stay stretched. I mean, it doesn't have to stay stretched for very long. And the buyers are just starting to pay up. They're starting to hit the offer and really drive that market higher. And you can see what happened after that. It's obviously traded straight up to 80 cents. So that was a good, what's that, at least 20, 50% gainer on that trade. I don't know where we're at 74.5 now. So taking that trade really, and the beauty is with that trade there, or with that entry, after you've pieced together the puzzle of from the weekly, from the daily, once the weekly, we got a break up out of that contraction point where buyers started taking control, you really didn't need to worry too much about what's happened on the weekly chart. It was more just drilling down to the daily and trying to get that refined entry. And we want to see what happens through 50, because it could have backed off from 50 on increased volume. It could have just kept getting rejected. Sellers keep hammering it down, and then it may have taken a bit of time to play out. It may have gone back down to 40 and started to, reset itself and drive up again. Or it could have just blown through 40. You've got a few people that would have seen that, the weekly chart, looking to buy it a bit early on probably on lack of confirmation. And confirmation, I mean through 50 cents. And then getting turned around and squeezed back out if it pushes through 40. And then all of a sudden you've got these stops that would have been sitting below 40 getting triggered and driving that market lower. So I think looking for this breakthrough 50 off your higher low, knowing that if it gets through 50, there's going to be a key resistance break off a higher low when the market's starting to go back into expansion. And we're always looking for, remember, a market that's going from contraction into expansion. When you're jumping into expansion, you're not taking much heat on the trade. You might have to give up a few cents. And if you bought that here at 40 cents, say, start of 2009, great, good on you. But if you bought it through here, back in August, when it was trading around, it touched down on 40 for the second time, say, or September, you've sat for a good, 4, 5, 6 months doing nothing, tying up your capital. And at that stage, there's no confirmation that market was heading higher. It could have still rolled over easy and you got stopped out. So there's really no reason to buy it. So I'm more than happy to piece together the puzzle, go off my high low on your volume and using your volume as another tool to confirm your price action, and buying into a strong market. Give up a few cents to buy in a strong market, because what you've got is, say, a 30-40% gain on that trade, even if you bought it through 55, probably about 30 cents. If it touched on 80, it's 25 cents. So you're looking at about 50% gainer, 40 to 50% gainer if you bought it on that trade. And that took the good part of about, a couple of weeks. I'd much rather that than buy it way back here, waiting for this thing to kick off. I know in hindsight it was done all right, and you can sit there and go, look, I've made more than you. I've made 50 cents. Yeah, but what have I done in that period of time? Potentially over that 6 months, I could have made another couple of trades for 10 or 20%. And I've overall on that one allocation of, whether you allocate 10 grand to the trade, 20 grand to the trade, off that one allocation, I've made better returns on those funds than you have sitting in there waiting for it. Does that make sense there, guys? What I'm trying to say, I was just trying to say, when you refine your trading, even though sometimes it doesn't look too great, because you have to give up a few cents or a bit of return, in the long run, I think by doing this, you're not spending time in the market, and you can actually, it's always better beating in cash, because if the market rolls over, something, happens out of the blue, we're not in the market taking a hit. We've actually taken our gains and into an extended market and taken a profit. You may have taken a half partial somewhere around here, and then just sitting there watching to see what happens. We're up near the highs. If you took it at 80 cents, good partial, and just sit there and wait and see what happens. So it's always the best thing if you can stick by, I guess, these key sort of factors: buying into expansion, out of contraction. When I say that, I mean contraction here, lower highs, higher lows. At this stage here, that's where we're looking to, let's just take a different color. That's what we're always aiming for, to go into expansion, and that you can drill down onto your, your daily chart to do that. But the weeklies on your side, we're starting to kick up, and if we get that run through 50, so expansion out of contraction, we're looking to do that. An increase in volume off a higher low, all those sorts of things are factoring in. It means there's a lot more evidence on your side to get onto the right side of the market and at the right time. I think that's the two key points: getting at the right time when the market's just starting to run. What was the other? At the right time. I just turned around, I saw someone out the window, and it's just threw me. I'm easily thrown. Does that make sense there, guys? So that's the aim. If we just look at a couple more, so put in some shares that you want to look at, and I'll just start to look at a couple more. I want to look at, Oh, TER. Now, TER is another one I do like, whether or not, and you can see, look at today, we're just starting to get that increase in volume too, but you've got a few little minor levels that you've got to take note of. So I really do like this, and I think I was talking to someone, it might have been Peter the other day, inside high lows. And by inside high lows, I like when it's had a run up, it's had a good pullback to flush out people, and then you've got an inside high low, which is potentially at this 55 zone, and that's confirmed once we get through that high on the weekly anyway, high of 69. So if you bought it through 69, there's a good chance. I mean, that type of setup leads to a high probability lead setup that leads to a run through the previous high, which would be 80 cents. So even if you bought it at 69, you got to 80, that's, I'm guessing, over 12, 15% gainer on that. If you just stall at 80 cents anyway and get a double top and it rolls over, so be it. But you can see that that price action on the weekly is running up. Good run up last year. A lot of heat come out, sat back on the MAs, tested the 50 MA. Then we started sitting on top of, this is the weekly chart, we're sitting on top of the 20 MA, the ones I use anyway, the EMA. So that, for me, is starting to look quite good. If we drill down to the daily, we just want to see what's happening in the volume. We've got a little pickup here on that volume off the low, but you're against the trend there. So you really, yeah, you can see that it's starting to get exhausted once you start getting the green candle against the trend. When the volume's lifting, you can start to look at that, go, hang on a second, that's maybe something I've got to put on the watch list to keep note of. We're getting a bit of exhaustion, and especially when you get a couple of days of rally straight back up to, at this stage, we got to high as 66. And then, so that there, you got this constant move down, maybe a bit of exhaustion once we got that green candle after a series of red. Whether or not it's going to be the end of a trend, we don't know. So we got good volume there on that day too, but it doesn't mean too much. You know, you get another good volume sort of candle the next day on the 24th of October, but we turned around and rolled over from there. So this one here, it's just really taking note. Okay, we've been oversold for a while. It's just ticked down with the market. Good green candle, and then all of a sudden you've got this run up. So sometimes it is hard to see that sort of thing if you're watching it, and it breaks out the highs. You just sit there kicking yourself. But realistically, again, you could have been sitting here if you bought on that high, sitting here for the good part of, like I said, a few months now, doing nothing, going sideways. And this is where we could start to get. We've got high low here, pressed up, pulled back, tried to test those lows again, didn't get there. High low, high low, high low, all on this daily chart. It isn't quite confirmed, and you're starting to get this cup formation. We call it cup and handle here. Bit of a cup starting to form with some high lows, and that there, I'm willing to bet that it's going to target a push up through highs of 69 and potentially straight through that 80 zone. And look what we got the last couple of days. We've got a good little increase in volume. The one thing I had this one circle just to take a note of is you can look at the depth. I don't know if anyone, let's look at the depth. Look, there's a massive offer there, and it's at 65. It's probably getting tagged a bit there. We tagged 65 last. Yeah, we traded 65. We traded a bit at 65. Okay, it looks like we just chewed through 65. So anyone saw that? We just chewed through that 65. So there's quite a big offer there, and you can see these bids starting to stack. So you're just going to be wary if you're going to chase the market. If you're trading these smaller ones, it's traded nearly $800,000 worth today, just over 1 million shares. It is starting to hold. It just chewed through 65.5 as well. So that's, to me, is very bullish. We're starting to get a good run, but I mean, this for me, I wouldn't chase it. It hasn't got a lot of offers on there. And I think not long ago, it's starting to stack up on the bid side, but just before it traded up towards 65, there was some very low bids. So you just got to be careful that you're not going to jump into something, and you're not looking at the market depth. I mean, if you do get a chance, if you can, look at the market depth anyway. Just make sure that if you were wrong, you've got something to lean on. You've got some bids to lean on. You've got some volume, a whole lot of buyers that are starting to support it as well. Are starting to put their bids on at slightly lower levels, looking for that maybe intraday pullback to jump in, or they're not willing to pay up the market just yet. But sooner or later, they're going to have to start chasing this market if it trades up through 67.5 or 69. Does that make sense? So this price action to me is looking nice. It has gone sideways the last month or so. So I'm sort of more willing to let this wait. If it can prop up through 70, the first pullback, if it can sit on the MAs like this, like we're seeing just back here, sit on the EMAs here when they're starting to spread apart. That's ideal. All right. So I think maybe TER, I've got my eye on. I have for quite a while now. I think we alerted this a while ago, but it just because it's popped up here and it's got volume, it doesn't quite mean that I really like the price action, but it doesn't quite mean it can't oscillate between 65 and 57, 58. And I might take a bit of heat. I might even take a bit of a loss if it rolls over and this becomes a double top at 65 and a half and rolls over and just trades back down. It doesn't look like it, but yeah, you're better to be safe than sorry. Safe on the safe side when the market's starting to lift, you're getting the MA starting to spread up. Like this is starting to see quite a clear trend is developing prior to these highs at 80 cents. If you can get that, that'd be great. Let's look at Triple T was another one. There's not much volume in this, even though I do like this this push up. It's not really supported by volume, especially the last few days, as opposed to something like this when you saw right back in, this is April last year. I think we got onto this. I'm just got to check in April. I get confused which ones we've done and which ones we haven't. Triple T. No, we did this November last year. Was it? 18, yep. So we bought it here, somewhere here. It did trade all right, but it was a bit of a tougher trade. I think we had this bit of a grind up here. We got ahead of our, it did well, but you can see that it wasn't really stacking up on volume anyway. But as opposed to something like when you got this volume increase back in April last year, you can see it starting to hold. If we just step back a bit, this price action I'm looking at, good green candle, and that's when it started to pick up, clear pick up in volume for a few days. It rallied, had a couple of red candles, but really volume didn't ease off too much. So if you bought it on this breakup through even the high of 169 on this candle here, you would have got in just before the end of the day, I'm guessing. Closed at high of 170, closed at 170. So if you bought that on that break, I mean, look what happened there. You've got beautiful price action. You can see the market pressed up, started sitting on top of the MAs. You got that press up, first pullback to the MAs, set on top of the MAs. You got this good recent volume increase on that lift out of contraction, look into expansion, and then you've got all that sort of technical indicators or whatever you want to look at as supporting your thesis. This market starting to run on, and it kicked on quite hard right up to say 290. So it would have been a good little gainer there, just purely by sticking to a few key principles. 5G is another one I'm looking at now. So look at the volumes increased recently too on, this is 5G networks, 5GN. So that's, good little increase in volume here. So increase in volume too, another reason why, taking note when it's starting to kick up and the price action is looking good. And this is where, I personally could get caught a few times looking too much at the price action, go, oh, the weekly, maybe the weekly's not great. We've got up here. Don't forget this story can change quite quickly, especially in the mid to low cap stocks. The story can change. They might have had a good news, a deal they've just signed or something like that, and all of a sudden that's changed the fundamentals of the stock. But the technicals are still trying to catch up. But if the technicals recently, especially on this one, I think they've had a couple of good results. Pop up, pull back, set on top of the MAs here. If you've got some sort of trade in here as it's starting to lift, even through that red candle on the 11th of Feb, you could be sitting on a handy little gain or two because fundamentally it's changed. Potentially that news has changed. Let me just see when the news were coming out. Oh, undo. There is a way you can mark up. Oh, here we go. Sorry. There's a way you can put on the news when the news come out. Here we go. So back here, it looks like some news started coming out. Strong second quarter performance. So there's some good news flow. Looks like it started coming out into this, and then it started to kick off. Started 2019. So that was over a quiet period too. So probably started 2019. The market's kicking off. They've had some previously good, solid news reports. started to tick off, and then after that, it's really a matter of just looking for your volume and a few other key things to support your trade. All right, let's forget about that now. Oh, last one. This is one we did have SLR, and you can see we were looking at it through here, 58.5. I think we got in, and you can see that this volume was starting to get a bit thicker. It was already fairly good volume anyway, but coming into this zone, the market was the volume was fairly light. Then you can see if you're just checking down here, the volume as we started lifting, volume was picking up, pressing down, a good volume spike up here. It's on back in 2018, all the way back down to lows. As we come back down to lows, you can see that volume's quite thin. So it's not bad when you pull back on light volume, and then on the rallies it's heavier volume. That's always a good sign too. It looks like that you just interpret on the way on a rally supported by volume. It just means that the buyers are starting to take control. They could be starting to hit the offer. Hitting the offer, they're not waiting for a pullback. They're starting to drive into the market, and you can see it's market press back up, pull back high low in here. Some good, solid volume. Again, the pullback. Then we started seeing this volume increase as we started to come off this high low, sitting on top of the MAs, and then from there it was game on, and it really started driving through on some really good volume. Good volume day, I think, on the breakout. The day we got in on the 14th of Feb, really high volume. 7 million shares traded that day, or just over 7 million shares. So it's great to see that volume pick up, and it drove through 60 cent mark, and from there it's been pretty solid volume too. All right, let's enough of that now. Let's get into some shares. We've got two to look at from Pete. OPT, we'll have a look at that. So does that make sense there, guys? Hopefully it does. All right, this is OPT, Opthea Limited. So this is a relatively small one. You can see by the volume, it's only traded, 6 trades today on 27,000 bucks worth, or was it 33,000 shares, 34,000 shares. So it hasn't done a lot just yet. Obviously very small, but you can't argue that if you're just stepping back, that price action's quite solid. The price action's good. Maybe it's just quite thin. Maybe that's why it's driving home. You don't know. So you want something with some good little volume. This pullback here, you got, with regards to volume, it wasn't really a decent change. You get these single day spikes in volume, which I put less. I want to see it build. I want to see it build over a few days, and then as it's rallying, volume starting to jump in. I like that, but ideally, this is what we're talking about in the way of setups. It's still, as long as you're not taking a massive chunk on it, I guess. What we're looking at, if you can see, so you had, low here, pressed up in the previous high, say, what was that, about 67.5. The market's pressed down, got rejected here, started holding through here, and you can see that quite clearly, looking to go back up. The buyers were stepping in constantly, soaking up that selling pressure, and that all there is a higher low in comparative to what we saw previously around 45 cents. That's a major high low. So the market's starting to press up. You got this run up here, which is great. Good pullback. We're sitting on top of the MAs. This is kind of a scary candle, I guess, if you're watching it. But in context of what's happening, the market's pressed up through a key zone at 67. That's sort of your first pullback in the overbought territory. So, and we're sitting on the MAs, probably roughly the top third of this run up. And you're always looking for, or I'm always looking for something like that. If this is your leg up, a pullback to the top third. So that's your top third of the pullback, of the run, of the trend. The bottom third is down here. So you're looking for the top third or higher up. If it consolidates at a higher level, that's always a good sign too. It's sitting, holding the highs, it's consolidating, and you started getting the market starting to run up. It's looking like it's ready to go. We just clear all that out. So the next thing we were looking at here, that's your pullback. We've got a pop up here. You can see quite clearly. This is your inside level. Okay, inside high low, it held 72.5 and then broke through, what's that, about 70, say 76. So that there, and it has just traded on 80, you would think is going to be another leg up of this original one from 55 to 80, say. say it's got 25 cents in it from 70, it takes it to 95. So this could potentially run up to 95 if that's the case. If we just take a step back, 95 would take it up to sort of this ballpark, that dollar mark where it's been there before. Potentially it's might find a bit of selling pressure, but either way, if it does find it up there, you've got a good run up, a good run up of about 20% or so, and that's just from using that inside level. So technically great. The daily's heading high, the weekly's heading high. Everything's lining up quite well. Maybe you'd like to see a bit more volume, a bit more action. Yeah, either way, it's looking good. All right, PET. I think I know PET. Again, this is a nice little, and you can see it's probably going to be hard to see, but if you go back to the weekly, good trend up. I don't mind this contraction on the weekly. Look, this is one that you probably just got to bear in mind what's happening on the weekly. Previously, you could see when we contract back to the MAs are still up. We've gone below the MAs. It doesn't matter so much if you go below. I mean, for what I'd be looking at, it doesn't matter for me so much because it can start to lift again and start to just trend higher, which it did back in this 2017, trending higher. Set on the MAs here, set on the MA, set on the MA. This is your longer term weekly. Kept sitting on the MA. This is the first time, and you can see it's probably had a good solid run up for a good part of 2 years by then. By the time we started rejecting that 47 mark and a couple of strong days down, you don't really want to see that. And especially when we got these couple of red candles pop back up, we couldn't get back up through the highs. And then it's turned around and sold off quite good. So it's got to have a deeper correction. So that's when you have those deeper corrections, it's a good sign that you're running out of buyers are willing to jump in at these higher levels, and they would prefer to see some players get washed out. But when you have the buyers starting to step in at a slightly or a deeper level or a lower level and starting to support it, which they are, they let it get through the MAs, 32.5, 30 zone, starting to buy it in here. You're just dropping it down to your daily charts to see what's happening. And you can see essentially a double top up here. Let's mark that up. Essentially a double top through here, bit of a pullback, 1, 2, like to see 2 moves, straight back up into the highs, failed. And once it fails for a second time, you'd expect a deeper move back. We've got that deeper move back, and then we're starting to hold high lows here, pressed up, took out the most recent lower high, pressed up, high low, pull back here, higher low, starting to press up again through that, what's that high at about 40.5. We're just there now. I mean, if you're going to trade it through 40.5, your stop would be around 35 and then just let it run to see how it goes. See if it can trade up to 47 and beyond. And that you'd have to just keep your, well, I'm not too keen on this. This may not have been, we talk about a complex correction, as complex as what you'd like to see, but the market's still heading high on the daily. The weekly's starting to hold higher lows as well, these inside levels. We're going to have a bit of a problem up towards that 47.5. We would expect the market to react, but everything's primed. I mean, the stochastics are down on the oversold mark as we got into start of the year, as we went through that pullback, and it's starting to lift. So on the longer term, it's got a lot of, it could easily trade straight up through 47.5. But that's sort of, if you bought it here at 40, say 41 on a break, 40.5, which could be any minute now, put your stop below the lows. You know exactly where you first port a call where you could get a bit of selling pressure come in. And if you do, it starts to struggle, you could just take it off, take a profit. You know, you're going to probably be sitting on, if you got 5 or 6 cents, you probably stood on 5 or 6, 7, 8%, something like that. So it's worth your while. SM1, Laurent, how are you, mate? You've been quiet there. Not like you to be quiet. All right, the weekly, I mean, you've got the weekly rising, the MAs are still up. It's looking good. It's starting to get a bit extended up here. Last time we were extended, we were way up at 12 bucks. Now we're at that lower level. So just maybe bear in mind what's happening on that weekly chart. But still, if you're trading from the daily, if you trade, you know, if you're new to SM1 and you could have easily have you can easily have a trade through highs at 1042 with your stop somewhere below 995, for instance, and that's your high low. You're just trying to follow the trend. You've got a breakout. You've got a new high created. That's your high low on this daily trend up. So you can see the market starting to edge high. It could start get ahead of itself, really start to go hard, drive up into 12 bucks, then if that's the case, then great. Good work, Lauren. Wannabe trades, cool. So yeah, that, I mean, SM1, I mean, you look at APT, that's kicking on nicely. Bub, I think today is, Bub's probably at an early stage of starting to show some good signs. And the thing for me is this weekly, I think it could easily press back down, clean out 50, pull back, build a high, low and go. But if it doesn't, you could still trade it from that daily. I just don't like this red candle here. See the red candle on volume? Then the previous, we had some good volume here, which started to pick up. Light volume pull back to the MAs. You can see through here. Volume, light pullback on the daily. This red candle rejection of the highs at 62, opens up, takes out the previous day's highs, and then finishes on its lows. I'm not a big fan of those sorts of candles in context of what's happening overall. I'd rather see it chop around for a while, on a few days, and then start to build. Chop around, any selling pressures coming in just get soaked up, and then start to lift again. If it does that on some volume, then great. And potentially this could be one to look at. And it could be one that's just easily going to lift up into that 90 to $1 zone where it's previously traded. That's Bub anyway. So back to SM1. SM1 seems to be a bit more, not contained, but a bit nicer this run up here since November. But yeah, if that's the trend up, and that trend up could easily, you don't know what fundamentally has changed since then to get it to lift. This is enough of a clean out. Could easily be enough of a clean out from 12 down to about 750, close to $5. It's not halved, but it's 40, 50%, 40% pullback. So in anyone's terms, that's a good clean out of the buys from the highs. I was probably looking at a bit extended up here, especially when the overall market rolls over and just bang, clean them out. And then since then, we started to lift with the overall market. So if the overall market keeps going high, everything's looking rosy, you could easily take that through, trade through there, but you've got to have tight risk on that one, I'd suggest, because of what's happened on the weekly, and we're potentially overbought. We're starting to maybe get extended. It could be all these number of factors just to bear in mind, so not taking too much risk. But if it kicks on, if it gets through this level, you can see the previous couple of days before that, good little pickup in volume, and it moved on. So it finished near the highs of the day. If you took it through that high, 960, you can see on the 22nd of Feb, last week. Oh, no, sorry, a few weeks ago. On good volume, blasted up and through, good follow through day the next day. It's come back down. It's holding, look like it's holding 10. Anyone that's looking to buy it previously through 9 or so could be that, that FOMO, chase it up, and they could really extend the market, especially if the offers start to thin out. So if you're in there, you're in nice and early, offers thin out, it could easily run up to 12, worth your while anyway. What was the next one you had, Lauren? SB1. WPL, I'm not a big fan of these just at the moment. Woodside. The weekly look to me is choppy. Good run up, bang, straight back down again. Good run up. We're getting extended. It could easily see that red candle here is quite a rejection. Kind of a candle finished on its weekly lows, and that was back up here, gap lower. We've sort of closed that gap. We could easily be pressing through 35, 34 low, this candle low, just in here, and good little retracement. You never know. So I'm not as I wouldn't be too bullish on that personally. I just don't like that price action. I think it could get a lot cleaner and elsewhere. Yeah, on Spark there, Laurent. AMI. I mean, AMI has been a fairly constant trend up. The weekly is looking a bit extended up at these levels. So taking a trade there, you've got to be really tight, I would suggest, on your risk. We're extended there. We're away from the MAs. You'd rather sort of pull back to the MAs to look to buy. Your first pullback on your weekly. If it keeps going, okay, that's fair enough. That's okay. If it just chops around sideways, the MAs catch up on the weekly, fine too. But I just wouldn't be just up here. I'm not too keen on this one, even though the trend is up, and it's definitely up. So pretty much you got the wind in your sails on this one anyway. CVN is something I had a while ago. Missed out on this little pop here. I got bored of watching it to the end of start of the year. Excuse me, I only made about 2 cents on that before this pullback, but I missed that little pop. We got So this one here, this could be primed, I'd say. I like this overall structure. Let's draw this one up. I think this is on the best of the bunch for me anyway, the way I'm looking at it. Let's just get that CVN. You've got some good sort of levels through around that 32 mark. You've got to press up, pull back to that 32, pressed up, kept getting supported at that level. Bit of a washout here before we started to, potentially we're lifting up again. And by lifting up, we've got this little run on here. A couple of good, what am I on the weekly, I think? On the daily chart here. Good little press up here. You can see which looks nice, this little pop up here, but we're still below that, a key level at around 46, 47, which is the previous high just in here. We're just below that level there, so there could be a bit of action. There's nothing to say. I mean, that's why I don't mind the fact that it's fallen short at 45. We pulled back to the MAs, and we're sitting on top of the MAs currently. If we can start to lift from here, then great. I think that could easily blast through 45 and go straight through that previous resistance. You might get a bit of a run on, especially if it starts getting supported with a bit of volume. We had a good little volume on this run up here previously, but nothing compared to the previous, back in July last year. But it's better than what we've seen the last few months anyway. So if we get that little pop up in volume, it's fairly light on the volume on the pullback. Stochastics are in a good spot. Weekly trend is, stochastics are still up. So really, this could be a zone where off your daily, it could be starting to lift. Where we want it to lift around 40. We don't want to see it back through the MAs, back retesting 36 or 37. I wouldn't be too happy because that's too far of a pullback of this little minor pop. I'd like to sit here. I'd like to see it sit here around that 40 or just above, finish above 40 today, and potentially start to lift the next couple of days. And if you start to lift, you can probably take it through those highs or take a bit of a preempt, especially if it lifts on a bit of volume. That could be good. Yeah, so that's quite good, I'd say, that one. Anyway, that's probably about it by the looks of it. We might just finish up there. Any questions, guys, before we finish up? If there is any questions, I'll give it a bit just to see. Market's up 30. We haven't really done too much. Where's our two? SPT going great. SLR's picked up. That's nice. And APT's backed off a bit. Just after trading through 50, was it 20 bucks, 21? The only three we've got going at the moment. It's probably cancel at the moment. Anyway, no questions. Feel free to email if you do, guys. Anyway, to support@tradesetup.com.au. Thanks for joining me. We'll be back in on, was it Monday at 12:30 again? If there's any topic that you might want to just discuss for the first half or so, 20 minutes to half an hour of the session, just let me know. Email it through and we'll see if it could be worthwhile to talk about with everyone. All right, guys, thanks for joining me. I'll speak to you on Monday. Have a great weekend. I'll get good trading week and a great weekend. Cheers, guys. Bye.